Hello everyone, this is Crystal with SlickTrade, and in this presentation I'm going to go over pure price action presentation number 9. Today we're going to cover head and shoulders and inverted head and shoulders patterns. As always, we must start with a disclaimer. When trading any financial asset, there's a possibility that you may sustain a partial or total loss of your investment funds. As a result, it is advised you should never invest with or trade upon money which you cannot afford to lose through this manner of trading. Trading involves a real risk of loss, and past performance does not ensure future results. Feel free to pause the video and read through the entire disclaimer. Let's get started. So, head and shoulders and inverted head and shoulders patterns produce an approximate 85% win rate. These patterns are the most statistically accurate of all of the patterns that I have covered so far. The head and shoulders pattern. This pattern is defined by two swing highs with a higher high in between, and they are considered the head and the shoulders. Okay, this pattern is considered successful when price extends at least the distance from the neckline to the head following the price break. Now, what I mean when I say this, okay, as you can see, price was headed up. Okay, and this is a reversal pattern. Okay, not a continuation pattern. But here we see price headed up. Okay, it created the first shoulder, retraced down a little bit to the neckline. Okay, so this line here is the neckline. This is the shoulder line. Okay, you retrace down to that neckline. It came up and it made a higher high, and this higher high is the head. Okay, that after the head, it came back down to that neckline. Then it came back up and created that second shoulder. Came back down to the neckline and broke. There's your price break, and there's where you enter your short position, okay, or short positions, depending on how you trade these. Okay, as you can see, this was successful because price extended at least the distance from the neckline to the head. Okay, so this distance right here, it moved at least that. Okay, so this was considered a successful pattern, and it moved well beyond that. So if you had multiple positions with different take profit levels and risk to reward, then you would have gained a decent amount of pips. The inverted head and shoulders pattern is defined by two swing lows with a lower low in between. These are considered the head and the shoulders. This pattern is considered successful when price extends at least the distance from the neckline to the head following the price break. Okay, so right here, price was headed down. Okay, it created its first shoulder right here. So this is our shoulder line. Okay, it came up, retraced up to here. So this is our neckline. Okay, came down, created a lower low, which this is the headline. Okay, came back up to the neckline, came back down, created the second shoulder, and then price broke that neckline. Okay, as you can see, entered a little bit of consolidation and then headed up. This was considered successful because price moved at least the distance from the head to the neckline. Okay, and in this example as well, moved well beyond that. Pending orders. When you recognize a head and shoulders or inverted head and shoulders pattern, you can either A, enter at market price once that breakout occurs, or B, set a pending order. Okay, the pending order you would want to set would be just below the neckline break for a head and shoulders pattern, or just above the neckline break for an inverted head and shoulders pattern. In the example to the right, you see an inverted head and shoulders pattern, And the second trend line is the neckline break. Okay, the pending order would be set just above for a long position. So here, price was headed down. Right here is our shoulder line. Okay, came up, created this neckline right here. Came down, created the headline, came up to the neckline, came down and created that second shoulder. And then here, our pending order is set just above that neckline. Okay, see these two lines right here. So as for your pending order, would be set just above. As you can see, price broke up and continued up. All right, creating a nice reversal. Trail stopping and risk to reward. After you've decided whether you'll be entering at market price or setting a pending order or multiple pending orders, you must have a trading plan in place, as always, okay, for your take profit levels and for solid risk management. In the example to the right, you see that same pattern again, the inverted head and shoulders pattern. And the next lines represent your TP or take profit levels. You would set TP orders with a risk to reward of 1-to-1, 2-to-1, 3-to-1, and a fourth position of 3-to-1 with a trail stop. Okay, so right here, okay, shoulder, neckline, head, neckline, shoulder, price break. Okay, now you've got your 1-to-1, which was hit right after consolidation. You have your 2-to-1, which was hit immediately after that, okay, within 2 hours after your first take profit. Your third position here, which was hit a couple hours right after that. And then your fourth would have this take profit, third take profit level. However, you'd be trail stopping that up, so you could have gained up to here. Okay, so pretty easy stuff. Once it's laid out, and once you go back in the charts and you check it out with your peer price action template, you're really going to see some good setups. And what you're going to see is that these have an extremely high win rate. Like I said, 85% on average. That is the highest win rate out of all the ones that I have showed you guys, okay? And that's huge, especially if you're using good risk to reward, okay? Solid risk management plan. It's very, very important, okay? You can be gaining a lot of money anytime that you see this setup occur, okay? Final lesson. In my final lesson of this 10-part series, I will be covering a run-through of everything you've learned throughout the course and giving you some golden tidbits to take with you on your trading journey. I'll see you then.